Okay, we have reconnected with Kylie Cohu. She's Vice President of Consumer Equity Research at Jefferies. She's an analyst who covers Spin Master. Kylie, thank you for joining us during that technical interruption. I was asking you about the outgoing CEO, Max Rangel. What's your view of the job he's done at the company? And are you implicitly critical of the job he's done, given that you're so positive on the incoming CEO, Christina Miller?
Yeah, I mean, overall, Max has done a really good job of doing what he's very good at. And he came from the consumer packaging world, did many years at P&G, I believe, and really was able to take the operations, take the logistics, and be able to kind of right size that toy business that I was kind of focused on before. So overall, I think he did a good job at doing what he was brought in to do. What the company needs to do now, like I said, is kind of expand its purview and really focus on these other verticals as well.
Tell us about your price target. It's well ahead of the prevailing share price. Your price target is 30 Canadian dollars. The stock is at about 23.50 right now. What kind of momentum do you see? What kind of valuation metrics do you use to get to a $30 price target?
Yeah, of course. So kind of breaking this down, like I said before, I think that the entertainment as well as digital gaming verticals are really undervalued in this stock. So normally what I would say is I would put any type of toy company at, let's call it 8 times EV to EBITDA, 2 years looking out. What I do though is take more of like a blended type of approach and, give these other verticals a higher multiple. And that's how we get to that $30 range.
Okay. How has the company been affected by U.S. Tariffs? In some of your recent work, you've noted that the company has cut some jobs, and I believe the company said it was cutting jobs to offset the effect of tariffs.
Yeah, so no one in the toy space is immune to these tariffs. So in order to offset the tariffs coming in, they've had to take various actions. So some of that is the job layoffs that you mentioned. Other ones are going to be, changing their sourcing and things like that. So they're trying to do a good job of mitigating that. However, at any price point, it will be kind of a critical error. With anything that's really above, like I'd say that 10% is going to have an impact on the business.